The decision comes as oil prices see a sharp decline. Oil price information service analyst and our friend here of the show, Denton Cinquegrana, is joining us. Denton, it's good to see you again.
Morning, guys. It's been a little while here.
It has been a little while, and we've got more news to get to. What do you make of the EU Commission proposing that across-the-board cut there, and what will that do to the global supply?
Sure. So, this is more natural gas versus oil. So what they're trying to do is really kind of build up their natural gas supplies for the winter, like you were mentioning, a 15% cut across EU nations. Now, you're going to have to get participation. You're getting a big ask out of the residents and consumers there. So, with that being said, it's going to be tough, especially when you have such high temperatures right now. Now, granted, in Europe, you don't have massive air conditioning base loads like we do here in the United States when it gets really hot. So, asking them to cut back on natural gas use is a big ask, but it'll put them in better position for the winter time and allow inventories to build up a little bit. And should Vladimir Putin kind of pull the plug on natural gas supplies?
Denton, I want to talk about some good news when it comes to fuel back here in the States. Listen, man, we're seeing prices go down and down. Matter of fact, Charlotte's right here on the border of South Carolina and North Carolina. South Carolina now below $4 a gallon. This is good news.
Yeah, no, below $4 in South Carolina. You guys are not far behind. I think the average this morning is about $4.14, $4.15. So really probably over the course of the next week or so, you could probably see, and again, this is all things being equal and no massive changes to the market, supply, demand, et cetera. You'll see prices drop below the $4 probably, like I said, within the next week or so in North Carolina on a state average basis.
And that, of course, is good news for drivers. But even though the prices are dropping of what we're paying, the supply is still very tight out on the market.
Yeah, and you're absolutely right. And, inventories are still relatively low for the time of year. Actually, they're very low for the time of year. I think a lot of the fallback in the marketplace has been, some demand destruction, which we have talked about. Year on year, gasoline demand is down about 5 to 7%. And that's based on various sources, not just the government data, but our own data, and also talking to large chain retailers throughout the country. So 5 to 7% down year on year. That's some demand destruction right there, which should allow for inventories to kind of get a little bit closer to normal. But again, it's been good news. Gasoline prices on a national basis have dropped for 37 straight days. We're now more than 50 cents below the high set a little over a month ago.
I don't want to jinx it here, but I'm grateful that it's going down. What would make it stop? What would make the plunge stop?
There's a couple things that kind of come to mind immediately. Is we have some really hot weather in the United States right now. Does that hot weather impact refining operations on the Gulf Coast and in Texas, in that area? Those refineries are built to run when the ambient temperature around them are really high. If we get 100-degree temperatures, say in the Puget Sound in Washington State, well, those refineries aren't built to run when the outside temperature is 100 degrees or so. So that's something to keep an eye on. But also, I hate to say it, we're at about a month and a half into hurricane season, and the Gulf of Mexico waters are pretty warm right now, which is conducive to hurricane formation. Now, you never really want to root for a hurricane really anywhere, but if we do get any hurricane activity, we want to root for it to not go to a swath of the country between, say, New Orleans and Corpus Christi, Texas. That's where a large chunk of the United States refining capacity lies, and any sort of storm through there that takes out refinery capacity is going to be bad news.
How long do we expect this trend to last, and will this be short-lived?
Yeah, I think we're not out of the woods yet. I mean, like I said, we're still in hurricane season. Inventories are pretty low. Prices going down may kind of artificially stoke demand a little bit higher. Not artificially, but could potentially stoke demand a little bit higher. So then we run into the issues. But the other issue that's keeping kind of a lid on prices right now is fears of a recession, not just in the United States, but globally, kind of starting in Europe because of their high energy prices, and the potential for a recession here has the market kind of pulling back a little bit. So it's a little bit of a double-edged sword. If we get continued downside, does that mean the chances of a recession get really, kind of amped up? And and at the same time, prices drop because there's less demand resulting from a said recession.
Denton, we automatically feel this relief at the pump in our wallets, which of course we're cheering over this morning. But how does this also, the domino effect, how does this affect all the other things like shipping? How's that going to help the trucking industry? Agriculture, the diesel that's got to be put into farming tractors and stuff like that. I mean, hopefully we'll feel this elsewhere.
Airplane tickets.
Yeah.
Yeah, no, you've kind of hit on all the kind of main points there. And diesel prices have come down. They haven't come down as much as, say, gasoline has. So, but that should help out with some of the shipping costs. Everything you buy in the grocery store or big box retailer, you get it there via truck. Jet fuel prices have calmed down. I don't know if you guys have traveled by plane lately, but man, it's difficult. I mean, besides high prices, they're dealing with labor shortages and weather issues. I could, off the air, tell you some of my stories recently on air travel. But again, it should help calm down some of these other aspects that are kind of loom in the background, if you will. You don't necessarily see them front and center, but they have a big impact on the economy overall.
Denton, we talk about the global oil markets and how it's a global commodity, and I think rising gas prices over the last few months have really put that sharp into focus for people. What is the challenge for the world as we go forward, trying to maintain supply and of course the price and what people are paying?
Well, I think a lot of this actually goes back to 2020 during the pandemic, when you had oil producers, oil refiners just really not making money because of low demand and low margins. So they didn't have the money to invest in future production. Now, with the quote unquote windfall profits, and granted, these are windfall profits for producers, but at the 2020, they had windfall losses, but no one was there to help them out then. There was no GoFundMe's or anything like that. But with that being said, they have money to invest in future production. However, the movement to ban internal combustion engines, the ban to get the move to get off of fossil fuels. If I'm running an oil company or a refining company, I'm saying, how much do I really want to invest in future production when I'm being told I won't be needed somewhere down the line? Now, I don't think that happens for a couple decades. I think that's a couple decades away. But with that being said, that's government policies, and not just here in the United States. It's really all over the world.
Denton Cinquegrana, oil analyst. We appreciate your expertise, advice. Always a pleasure talking with you. And listen, the church choirs are getting ready to sing Hallelujah when North Carolina gets to $4 or under.
$3.99.
We'll bring you back on when that happens. All right.
Sounds good. I'll be here.